Noah, you're coming to us from Toronto. I know you're an active participant in this market, but watching what you've watched play out with the elections, give us the perspective of somebody who's sitting up north.
Well, most of what I do in terms of the securities I own are obviously, I run U.S. equities for the most part and global equities. So, I'm highly obviously tuned into what's going on. I think that the expectations going in with the polling data and everything else were this massive blue wave and expanded Democrats in the House and in the Senate and in the presidency. And that sort of came crashing down with the Senate, right now tied. I'm not sure why they're not calling the last two Senate races and the Democrats losing voters in the House. It seems much more like gridlock. And obviously Wall Street has sort of breathed a sigh of relief. Given some of the things that we were hearing right before the election, I think that it's turned the volume down quite a bit, and we'll see how things play out. Obviously, I think that this is going to go on a lot longer than people think in terms of figuring this out. But still, I think that there was certainly some nervousness about one party within an aggressive agenda, and that's kind of off the table. So I think the markets have breathed a sigh of relief. At the end of the day, though. To the extent that this is about the economy reopening and COVID cases, I think, we're still tuned into that and hospitalizations, obviously. We're still tuned into that, and that has not been resolved.
A lot of people think that we're going to start focusing more on the earnings. That's going to be the primary driver for stock prices. But as you mentioned, if the election drags on for longer than expected, and as the COVID cases continue to climb, those can act as a pretty big distraction. What's your take on that?
Well, I think that what's been pretty impressive, my main focus, I'm not really a macro guy, but obviously you can't ignore the macro. But as I've gone through earnings conference calls, I would say that not only the magnitude of the earnings and sales beats, but also the commentary on most of the calls has been very, very positive. For most of the companies. Now, obviously, as you re-lock down states, some of that is in jeopardy for sure as COVID and hospitalization. So we're not sure, but the early indications are certainly that things are definitely improving amongst the companies that are out there. I also think that unlike a typical recession, this has been anything but typical, where you have a hit to demand and then excess supply. The pandemic has hit both demand and supply. And I think your earlier interview with General Motors is an example, whether it's in automobiles or in housing, just the level of inventories across the board is extremely low. So there's certainly a lot of firepower left in this economic recovery as things to gain traction. But where it really where we really the tread hits the road is really going to be once perhaps we start to roll over a little bit. This isn't March. We're a lot closer to vaccines. We're a lot closer to therapeutics than we were before. So, there's nothing we can do except see sort of how this plays out. And, obviously lockdowns are going to have a negative economic impact, but we just sort of have to see how this virus plays out. And you're right. It certainly remains a level of uncertainty. But there have been a number of pockets of companies that sort of powered through the pandemic, especially in technology. And with the economy improving, I expect that to expand for sure. But also to accelerate some of the digital transformation that we saw accelerate in March. That's really going to continue.
Shepard Smith here. Thanks for watching CNBC on YouTube.